Welcome back. Today, we'll be looking at the types of fundamental analysis. Okay, in the previous video, I was talking about the basics of fundamental analysis, where it comes from, as you can see here in this region. So now, today, we are going to look at the types of fundamental analysis. Here we go. There are two main types, and they are very important. So, number one, quantitative analysis. The second one is qualitative. These are the two main types of fundamental analysis. Let's start. Let's just look at quantitative first. What is quantitative analysis? As the name suggests, quantitative comes from the word quantity. This kind of analysis deals with numericals, measurable data, and or numerical data. Now let's look at the application. Okay, so we're going to look at this in two broad categories. There's there's stocks. There's in stocks there's quantitative analysis, and then there's in other products, other other financial markets products. So in stocks, when you're doing quantitative analysis in stocks, this is where we talk about financial statements. This is also where we talk about stock price history, the history of the stock price. All the other factors included when it comes to when you're analyzing a stock, stuff to do with the financial statements. We mentioned them. This is where we can include the EPS, no, EPS, the PE ratios, and okay, the other stuff that these companies do. In quantitative analysis for stocks, you this is where we look at the financial statement, the financial health of the company, the stock price history, EPS, PE ratio. EPS is earnings per share, how much revenue the company is actually generating. Yeah. Now let's go to the economic data. When it comes to economic data, quantitative analysis of economic data, this is where we look at raw numbers, the raw numbers, like just as they are, CPI, PCE stuff, all that kind of stuff. It falls under here for quantitative analysis. These are measurables, and they measure specific details about the economy. GDP measures growth, uh, inflation measures prices, employment data, interest rates, and others. So these are the main ones I'll be looking at today. As you can see here, this whole scope of quantitative analysis, it deals with measurable data, measurable numerical data. This is concrete measurable data. All this quantitative analysis, as you can see here, we are really just talking about the numbers as they are. Now let's go to the next one. This is where now the real work begins. All right. Qualitative analysis. In qualitative, as the word suggests, as the name suggests, it's derived from the word quality. This is analysis of the sentiment. You can also say the story around the data. This is specific to stocks because something in stocks is that if your company is hated, it doesn't matter if your numbers are good. If your company is hated, people are just going to short it. People are just going to sell your stock, and your stock is going to crash. That's something to do with qualitative analysis. Is the sentiment around the company, the story around the company. When you talk about qualitative analysis in stocks, the opposite is also true in most cases. If your company is loved, it's going to do good, regardless of how bad your numbers are. If your company is loved, it's going to do good. And even the numbers might be good, but there's too much greed around your company and the hype is too big and the story is just taking over the stock price. This is where this is where now you hear companies are being categorized as either overvalued or undervalued. It's yeah, this qualitative stuff. That's where they come in. Okay, this is where we look at the quality of the data. Now mm, this qualitative analysis, this is what affects price action in the short term to a very large extent. Like if there's fear or there's two main emotions at play in the market, fear and greed. If there's too much fear, of course you can expect chaos. If there's too much greed, of course you can expect chaos also, to opposite directions. Yes, so this is all to do with the sentiment, and this is all to do with qualitative analysis. And honestly, this when we talk about analyzing the quality of the data, this is where the question of whether it's good news or bad news arises. Yeah, the quality of the data. It doesn't matter if your company is performing. Yeah, it's performing, but is this is this a good time to be doing this? Is this a bad time to be performing? Is your performance above average or below average of what your usual output usually is? So, yeah, this qualitative analysis is looking at the quality of the data, and this is where we analyze whether the data is good news or bad news. And now let me write this here. This is what affects price in the short term to a great extent. Qualitative analysis. This quantitative analysis, this other part of quantitative analysis, it usually takes effect on the market. The real value of the company or the real value of the economy is not reflected directly on its stock price or on its currency, on the country's currency. This other side of qualitative analysis, this is where now um, the situation of whether something is good news or bad news, this is where short term price action is heavily affected. And when you talk about reading the news, this is the part you really need to understand well. Qualitative analysis. Let me continue. Yeah, with some quick notes. I'm going to just skim through here. The narrative is highly dependent on the current market or economic conditions, and these conditions vary over time. They change from time to time. This is where now we're going to see if you're a fundamental analyst, or if you want to do this fundamental analysis thing, you need to stay up to date with the current state of the economy to understand how the data will affect the market, to understand how incoming data will affect the market. If this happens, the market is going to pump. If this happens, the market is going to dump. I think this is where now we're going to bring in an example, right? So let's look at an example here. I'll just continue below, and we're going to look at the example, and just we're almost winding up. Let's look at a regular example first. A regular example, like a common event, something everyone knows about. This is now aside from fundamental analysis. This is something just everyone knows about. We're trying to make you understand how how the sentiment around a data piece can really affect the expected market reaction, or just the expected emotion that to be insinuated. For this example, mm, it's very unfortunate that I'll have to use this one, but this is the best one that I think I can use in this case to drive the point home. Let's talk about the pandemic, right? Coronavirus. Let's say there was 1 million COVID deaths this year, right? This year is 2023. So this year so far, we have 1 million COVID deaths. That's that's outright. That's a no-brainer. That's bad news, right? That's just the quantity. Okay, it's the quantity of the number of deaths, just as it is like that, and that's bad news. Very sad news. Let's put an emoji here. That's bad news, right? 1 million COVID deaths in 2023 so far. That's an example. Uh, Now, let's let me continue with this sentence so you can understand what fundamental analysis is usually about, how these things affect the market, what qualitative analysis is. Down from 5 million deaths the same time last year. What I want you to see is the situation is still bad, but it's not as bad as it was the same time last year. So this new release will change the whole scope of the data, and it'll turn out to be good news. Let's put an emoji here. This whole statement now is good news because 1 million deaths down from 5 million deaths the same time last year. That means we're making progress. Health as experts would like to say, oh, the vaccine is working, or the masking up is working. All these things, they're working. We're seeing progress. So this initial sad statement of 1 million deaths has now been turned into good news because the same time last year we were at 5 million deaths, and that was when the situation was dire. I hope now you've understood. This is this comparison of two situations, this bringing in the sentimental part of it, analyzing the condition of the condition of the current state of the world is now this is where we come the this is where qualitative analysis comes in. And this is what affects activities in the market, right? Now let's go to an example based on an economic release. Let's look at inflation, right? Let's look at inflation since that's the one currently stealing the limelight. Inflation is currently at 5%, down from 6% last month. This is going to mean two things. Number one is going to mean that the economy is slowing down, and the second one is going to mean prices are falling, right? Inflation is cooling. Now, remember, with a release like this, with a release like inflation, the preferred inflation rate for most economies is 2%. When the inflation rate is above 2%, that's considered that's considered bad news, and the economy is running too hot, right? So in this case, that inflation is falling from 5% to 6%. That means the economy is slowing down, right? But that doesn't exactly mean that that doesn't mean the economy is falling, no. So in as much as this would regularly be considered bad news, that's not the case this time. This is now considered good news because the economy is stabilizing. When the economy is running too hot, there's a problem. When the economy is now cooling from the very high the very high growth rates, that's considered good news, right? So I believe that point is home. Now let me talk about inflation and how a slowdown in inflation can result into bad news when these same factors are considered. CPI currently at 1% down from 2% last month. CPI is Consumer Price Index. It's the common measure of inflation. If you don't know about it, stick around. You're going to find out more about it in other videos that I'm going to release. So CPI currently at 1%, down from 2% last month. This is also going to mean the same. This is also going to mean the same as these two here, right? The economy is slowing down and also inflation is cooling, right? But in this case, this is now this is now bad news because inflation being at 1%, that means the economy is growing at a below pace growth, a below the preferred pace. Inflation, in as much as it is considered, it's widely considered harmful by the average guys, the average citizen, just people who have little to no knowledge about economics. They might think inflation is bad, but actually inflation is good. It's a measure of economic growth. So when inflation is 1% down from 2%, this means the economy is slowing down and this inflation is cooling. So this is bad news because this is a below trend growth. The 2% is the preferred target, and when it's below 2%, that's bad news. When it's above 2%, that's considered also bad news. But the trend is also something to consider. You see, like here from at 5% down from 6%, that means the economy is slowing down and inflation is cooling, and that's good news because when the economy is running too hot, it becomes too fast to things go too fast for the average citizen to keep up with. Prices rise too fast, and commodity fuels. Yeah, you understand this. So I'll, I think I'll stop there for now. Understand that this is now qualitative analysis. This analysis of whether a release is good news or bad news. This is now qualitative analysis. And let me let me add something here. When it comes to staying up to date with the current state of the economy, yeah, you remember here this point, this very important point. When it comes to staying up to date with the current state of the economy, there are currency pairs that there are economies that application in fundamentals works well. There are economies where keeping up with the fundamentals is very hard because in most cases the data comes out late or the data is inaccurate and there are not very many sources to rely on. So let me just give a quick list of the economies you should prefer to the economies you should probably look at when you're doing fundamental analysis. You just don't do fundamental analysis on all pairs. No, that is not an efficient method of doing it, especially this qualitative part. Economies that I have seen that they release data that is timely and reliable, and there's a lot of interpretations you can find online about the true meaning of the data is one, of course, the US, the Euro area. Japan is also good. When you trade fundamentals of Japan, it can work well. Another economy is the Great Britain. The UK, this is the UK. Their economic data is also widely available. There are very many articles and interpretations you can use, but preferably the US, the Euro area. These are the ones where, if you want to trade fundamental analysis, you can focus on the economic releases of these three main countries. Now let's look at the bad ones. The bad ones, of course, China being number one, their data is often not reliable because even I think they use a fixed exchange rate regime. Yeah, they are just fixed. It's not flexible. That's why even you rarely hear people trading CNY pairs. It's not common. So China, this is a no-go zone when it comes to fundamental analysis. Australia, New Zealand, these little known countries don't trade their fundamentals, especially I'll give an exception once I'm done with this list. New Zealand and Swiss, the Swiss currency, the CHF. That's also a bad one to trade their fundamentals. Another one is individual countries in the euro area. There's the European Union as a whole, and then there's the individual countries. Ignore them also. I'll not I'll not write them here, but there's one very important one I am forgetting. Let me just leave it for now. Anyway, yeah, it's Canada. This is another currency. This is another country where it's not recommended for you to trade the economic releases. It's not recommended. Ranking them, this is just Swiss and Canada are not too bad in fundamentals when you're trading them, but they're also bad. Okay, however, universally, you can trade the interest rate decision of all these economies, except for China, of course. If the Australia, if the Reserve Bank of Australia is having a rate hike, you can go to the chart, look for a setup, and trade that volatility, and you're likely to make something. New Zealand seems to Reserve Bank of New Zealand. Swiss is the what's it called? What's it called? I've forgotten the name. A Swiss National Bank. Yeah, for Switzerland. Swiss National Bank for Canada, Bank of Canada. All these big major economies. You can trade their interest rate decision. They usually have clean moves for the most part. If you understand the yeah, if the clean moves for the most part. So that's it for today. As you can see here, uh, we've talked about fundamental analysis, types, quantitative and qualitative being the main ones. And I'm sure you have seen that this qualitative one is the biggest. This is the widest, and this is where all the work done. This is where all the work is. Qualitative analysis. Remember that.